Hi, it's Joe Neighbour. It's the 4th of October, representing Acuity and Signal Centre today. Just going to run through the latest market alerts and update from a technical perspective across multiple timeframes on the NASDAQ 100 index in the US. Really important time for markets. We're seeing a lot of volatility, as we know, and creating some challenging environments for us all as traders and investors. So I'm going to try and break down things on a technical basis and also look at the new sentiment underlying these markets at the moment to see if there are any opportunities that are emerging. So I'm going to start off with the charts and focus first of all on the long-term outlook for the NASDAQ 100. So we have the monthly chart here on the screen going back really to around 2011. There's a pretty deep correction in the markets around that time, and from then markets have been persistently trending higher, as we know, supported in part by loose monetary policy and supportive government action. Of course, we've seen some blips along the way, most notably, of course, the coronavirus pandemic, which was in 2020. Bit of a short, sharp shock to the market before the central banks and government stepped in to help. And from that point, this is the mark on the chart. We saw a substantial rally higher in risk assets, with tech really taking the crown as the most impressive gainer out of all the markets globally throughout this phase. But now we are facing some uncertainty, facing some economic challenges, and as you can see here, we have seen a pretty substantial pullback in the value of the NASDAQ 100 and currently in bear market territory. Bear markets are when markets drop 20% from their highs. That is the technical definition of a bear market, and we are very much in that at the moment, and also potentially staring down the barrel of a recession, not just in the US but globally. And of course, this is having a really large impact on shareholders, investors, and traders alike. So if we can break this down and see if there are any opportunities at present, then hopefully that will help shed some light on the current situation. So just looking at this from a monthly time frame, first of all, we can see there is a pretty well established trend in place. It is trending higher. But of course, we have seen this pullback in recent times. Now, we have formed some major support on the chart on the NASDAQ around 11,030 on this monthly chart, which is highlighted here by this blue line. And we are coming pretty close to testing this long-term uptrend support as well. So if we get a break of that, then that would be a pretty telltale sign that things aren't as good as we believe, and that could threaten the long-term uptrend here on the NASDAQ. Let's just drill down into a weekly chart here just to get a clearer look at this support line. This 11,030 level has been highlighted because it's this key low that we posted back in June 2022. Now, in recent weeks, or in fact last week, we saw a breach of this level on a closing basis. So that was on also a weekly basis and a monthly basis. So really quite an important candle. But what we're seeing now this week is a sharp reversal in the price. We are, as things stand, posting a bullish engulfing candle on the weekly chart. Now it's only Tuesday, so we have a long time between Tuesday and Friday to try and hold on to these gains. And if we can, that may be an indication that price is going to rebound from here in the very short term. My expectation is that it will only be a bear market rally, which are very common and they can be very substantial as well. So do bear that in mind. If we look at the dominant trend on the charts, and what we'll do now is drill into the daily chart to get a perspective of this, then we can see that the sequence of trading at this moment in time is that we are posting a sequence of lower highs and lower lows. Now that is a classic definition of a downtrend. So we posted this lower low last week, but we are rebounding quite substantially, as I said. And if we look at this on the daily chart, yesterday what we posted was a bullish outside day candle. So this is when we make new lows on the session and then close above the highs of the or above the close, sorry, of the previous session to form this engulfing candle. Now, typically that's quite a powerful reversal candle in its own right, but when it's supported with further positive price action, that can add further confirmation that we are indeed going to see some sort of rally. So prices are picking up, they're perking up, that's for sure. In terms of where we're at the moment, it's 10 to 1 on Tuesday in the UK, and we're up 1.8% on the NASDAQ futures as things stand. So it looks as though we're in for a positive start today. Now, In terms of local resistance, we've got a level to focus on at 11,551. This is the key high that was posted on the 28th of September. And if we can rally above this, then we may start to see some further positive price action in the very short term. That would be an indication that in the short term, we are set to see some higher prices. Now, as we stated, the overall trend does remain bearish. We are seeing sequences of lower highs and lower lows. So if that is to continue to play out, then maybe this short-term downtrend will act as a barrier to resistance in the short term. So we need to keep that in mind. And if I'm looking for resistance levels on the chart as well, I would be looking for the low that we posted on the 12th of September. That was the candle prior to this big move to the downside, and that comes in at 12,567. So for me, that would be quite a key area to try and target in the short term on any rally. Other tools that I like to use in order to try and find where price is going to go on the upside is the Fibonacci tool. So if we take it from this swing high that we posted on the 16th of August and draw a line down to the low that we posted just yesterday, in fact, and get some Fibonacci, classic Fibonacci levels on this chart. 38.2 is always a good starting point. That comes in at 11,936. Then we have the 50%, which pretty much today lines up with this short-term downtrend. And then we have the 61.8% fib level, which lines up with this resistance that I've highlighted on the chart in blue. So that would be a nice confluence area to potentially target on the upside in the very short term. I think to really get behind this, we do need to see these highs from the 28th of September taken out, and then maybe we can start to get a bit more momentum behind this. In terms of the latest economic data, it's been pretty negative. We saw some data out yesterday on the from the US side of things with the ISM manufacturing index, which came in worse than expected. It was actually approaching contraction territory below 50, but it seems as though at the moment we're in this phase in the market where bad news is being perceived as good news, which may seem absolutely crazy. But if you think about the logic behind this, we've been so accustomed in markets over a number of years now that central banks will often come to the rescue of traders and investors and to the market's help when it needs it. So if we're starting to see bad numbers, we're starting to see the economy start to contract, then it may raise the case that we need some more central bank intervention. We obviously saw this last week with the Bank of England stepping in following the mini budget in the UK. And there are rumours that we may see something similar from the Federal Reserve at some point in the future. At the moment, the rhetoric seems to be still quite hawkish, and they aren't pivoting away from this train of thought that they are going to be raising interest rates for the time being. But when the numbers are starting to come in weaker on the economic side, on the macro environment, then that maybe is making more of a case that we will need to see some sort of support from the governments and the central banks at some point. So markets seem to be absorbing that bad news and taking it as good news at this moment in time. Of course, that could change at any point. But also what we like to do is use news sentiment to try and guide us and give us an indication as to whether or not sometimes these rallies can be believed based on what we're seeing in the general news flow towards markets at this moment in time. So what I've got here is our research terminal, which uses all of the tools that we have at our disposal. So we use artificial intelligence to read thousands and thousands of articles on a daily basis to try and gauge what the sentiment is towards these markets at the moment. So effectively turning news into data and creating scoring methodologies from this. So looking at the NASDAQ 100 or the US 100, we can see here on the chart that we have the news sentiment alongside price action. So price is in white and news sentiment is the blue line. So what we can clearly see here is there has been a fairly tight correlation throughout this period here, where news sentiment has been pretty much correlating alongside price. But interestingly, over the last few sessions, we've started to see the price action move to the upside, but we haven't seen the same thing happen just yet with the news sentiment. In terms of what's happening over the last 24 hours, we can see that news sentiment is improving here on the radial gauge in general. But if we look at the overall trend of the news sentiment, we can clearly see that this remains in a downtrend and that the general news towards the US markets, and particularly the NASDAQ 100 in this instance, is still indicating that it's very bearish and the outlook remains bearish. So that is maybe a little bit of a warning sign that although we are seeing some reasonably positive price action in the very short term, that we do need to still take into account the underlying news sentiment trends that we are seeing in the market at the moment. In terms of the market alerts, these are generated on an automated basis when we see certain crossovers occur in our AI functionality that we have, and this can generate some really interesting signals using news sentiment alongside price. So 11 days ago was the last time we had a market alert, and that was a 50% confidence in prices moving lower. So in this instance, the daily news sentiment was moving lower, and in 50% of the previous last 10 occurrences that we'd seen this, price had then gone on to fall within the next 9 days. Now, obviously, that was 11 days ago. The rally in the price started yesterday, so pretty much nailed the outlook there by suggesting that price would continue to move lower over the next 9 days, and that's exactly what we saw. So we have now started to see a little bit of a lift in the price, but overall the news sentiment does remain bearish overall. But in the last 24 hours or so, we have started to see a little bit of a pickup on that, and that will be reflected in the chart in the coming days. So be cautious is the message here. There could be opportunities in the short term for a bit of a rally. Particularly in some of these equity markets that are approaching very heavily oversold levels. The likelihood is that it will be a bear market rally rather than a full-blown reversal in price. We can't rule that out because we can't fortune tell, unfortunately. But overall, we do need to take into account that there are multiple factors at play here. But looking purely on a price action basis, we could argue that we've seen a nice turnaround based on this bullish engulfing candle that we posted yesterday. Nice follow through in the price action today. Still very early on in the week, but if we can get above 11,551 in the very short term, that may provide some further relief to the market in the short term. Hopefully that's been useful. I'll be back very soon with some more market alerts. And until then, guys, please trade safe. Goodbye.